Cindy,
Hey, yeah.
um, I just happened to jump on, but I had it down for 2 o'clock.
Oh,
Did
it's
that
one
time
o'clock.
change?
No, it's always 1 o'clock.
Okay.
Yeah. Okay. So we are delighted to introduce Jolene Moore as our distinguished speaker today for the October mortgage and market updates. Jolene is a celebrated expert in mortgage finance, renowned for her deep market knowledge and meticulous attention to detail. As a leading authority in the field, she is recognized nationally as a top producing lender, and I mean a top producing lender. And she didn't come by that by accident. She's really good at what she does and has a great team. Jolene currently holds the position of branch manager and senior home loan consultant at Cross Country Mortgage. She's based in Fairfax, but it doesn't matter where you are because she can handle you wherever you are. She is also a sought after trainer, sharing her expertise with through Cindy Bishop Worldwide. Jolene offers a variety of educational programs, including mortgage training sessions, both in person and online with us. Business development seminars and other courses tailored for real estate professionals. To learn more about Jolene's training opportunities and how they can help elevate your business, please visit our upcoming events page at citybishopworldwide.com. We have her stuff under webinars or in person. It just depends on what it is. And occasionally she'll treat us with a CE class. So, but I love her finance class. When you guys see that advertised, it's probably the best financial management class I've ever taken. So make sure you pay attention to that. And I'm sure she'll have it again. Aren't we having that again soon? Yes, we're having that in November. I want to just say that.
Yeah, because I think October is goal setting, and then November is financial freedom.
Yeah, and that one, guys, is just it'll blow your socks off. It's one of the best I've ever seen, and I've taken quite a few of those kind of classes in my days of real estate, even CRS stuff related to that. And Jolene's is the best. All right, Jolene, I'll stop talking now. Take it away.
Thank you. Yeah, and the other thing I'll say regarding the goal setting class, I'm going to change that up this year too. I'm going to do it a little differently. So it's going to have kind of a different take on just the regular, what we think of how we set goals and all of that. So
Okay.
would love for you guys to sign up for that as well. All right. Yeah, and it's in person, as Leslie says, here at our office in Fairfax. All right, very good. Okay, well, thanks for hopping on today. Like I said, I'm traveling, so I hope the lighting's not too awful here. But and I only have one screen, so if you guys do have questions, it'd be great if you just unmute yourself or comments. I love interaction. If you've been on any of my classes, I love to hear from you. I love to know any thoughts, questions, concerns, anything you want to share. We are here to hear you. Okay, so rate environment. So it's been very interesting. You know, we did one of these right before the Fed meeting last month. And as I'm sure we all know, the Fed's lowered their rate, right? And a lot of clients, and I will say there's a decent amount of agents as well that believed that our rates went down when the Feds made that change. And unfortunately, that was not the situation. So rates have been improving, right? We are definitely in a much better place than we were earlier this year. And it's, you know, one of the lowest points that we've been, but I think since 2022 or something like that. But did we go down 0.5% when the Feds cut their rate last 2 weeks ago? We did not. And unfortunately, actually, what has happened is our rates have actually moved up a little bit since that in that 2 week period. So, you know, there's a challenge. And so as much as we can spread it out to the clients to let them know is that when you talk to a client who's not aware of how this works, is their immediate thought is, oh, that's got to be wrong. You know, you're just telling me that because you don't want to give me a good rate or you don't have good rates or whatever it might be. So the reality is rates prior to the meeting of the Feds, the market was already anticipating that rates were going to be cut by the Feds. So the bond market, which is what controls long-term interest rates, had already started to improve based on the assumption that they were going to be making that adjustment. So they did make the adjustment. And then after that, there's some other reports that have come out that have actually caused us to move up a little bit. So what I was going to show you is a chart here. Get it. I can get it big enough. Okay, so this chart here, you can see, whoops, hold on, sorry, this is challenging. Okay, so if you can see the dates right here, September 18th, that's when the Fed made the changes. So you can see going down here, when we're going up, when you see the movement of the chart to going up, that means rates are improving. When the chart's going down, that means rates are increasing. So you can see that we started making an adjustment probably about August 8th is kind of when we hit the bottom. And that's when we were at the highest point that had been at. And then now have been on a trajectory where you can see the green means that the bond market closed better than it opened, and for us meaning better, the rates have improved. The red means that the market actually closed worse for us, which means that the rates would be increasing. So you can see that it's definitely not been a straight line. We've had reds and greens along the way in August. Then we had several days of hitting green, where we were just moving, improving, right? And that was about to September 10th, because there was economic reports that came out about this time frame. The job numbers in September showed that the numbers were lower than expected. That helps long-term interest rates. So you can see that we started to improve. And then we kind of flatlined, like we didn't really do much. We'd kind of go up and down, from that week before the Fed's meeting. And then come September 18th, when they made their change, you can see now we're slowly been decreasing or, worsening, which means rates are increasing. So have they increased significantly? No, but the unfortunate is a lot of people believe that they've improved, which unfortunately they haven't. So it's just trying to create awareness for you all so that you can share that with your clients of what the market has actually been doing over the past couple of weeks since the Fed made that change. Now, there is anticipation. So what also has happened, you can see over the past couple of days, Chairman Powell made a comment earlier this week that they are in no hurry to cut the rates, that they think the economy is strong, that the labor market has softened, but not to where they're super concerned. So they're going to take their time in lowering the interest rates. So when that happened, that's kind of what's happened these past couple of days, where we have saw that rates increase further. And then you can see right here, this line, what they call that is a line of, oh my gosh, my brain can't work right now. But basically it's saying, when it hits that line, if it bounces off, it's a good sign that we're going to go back to improving. But if we hit that line and keep worsening, that means that there's a big spread from here to where we could worsen more. So it's all about what's happening in the economic reports. The job numbers come out again on Friday. Most industry experts in our market say whatever happens on Friday is going to be a good indication of what we see over the next few months, or at least the next month, relative to what the interest rates are going to do. Do any of you guys have any questions on this? Does this make sense? Does this help you explain, what's happening with the market to your clients? No one has any rates on or questions on rates. Okay. All right. I'll believe you. All right.
I do,
All
Veronica.
right. Thank you, Veronica.
Jolene, yeah, that chart was interesting, but a simplified way to explain to someone who feels that I hear rates are going down.
Mm-hmm.
It would be natural for us to respond and say, yeah, they are, right?
Well,
because that's
they
what
are
we're saying.
improving. But what I would
Okay.
say is that it's not a straight line down. It means there's going to be a bumps along the road. We're not going to just keep going down like this, because just like you saw in that chart, we have
Mhm.
days where we worsen and days where we improve.
Of course.
And that's what we've seen, like historically back for several months, during this time frame that we've been seeing. So you definitely want to help clients, yes, like I said, it's definitely much better than where we were. But I also just want them to understand that what the Feds don't control long-term interest rates. They're based on the bond market.
Okay.
So what the Feds do indicates that usually when the Feds cut their rate, it means they've hit their inflation goal or the economy is struggling. And so that means like the labor market has softened, inflation has come down, and that's why the Feds are lowering their rate. But they don't control the long-term mortgage interest rates. So anytime they do that, historically, if you look at our rates do start to come down once they start to lower their rate, but it's just not in direct correlation. So there is expectation that we're going to continue to improve, but it's going to be some bumps along the way. And it depends on the day of when they're locking in of where that market might be.
Thank you so much.
Yep, you're welcome. Thank you for the question. Okay. All right. So, the other thing that's happening right now, as I'm sure you guys have heard in the news, is the longshoreman strike that happened as of October 1st. That also could potentially have an impact. I saw a video. I don't know if you guys have seen this, but I think it's the head of the union had an interview, and it was basically saying, their impact on cars, on lumber, on so many materials and so many things that are being exported into our country. The longer that strike goes on, the more impact we're going to see. He was saying, like, the first week it's going to be minor. Second week, you might start to see not as many cars on the lots. Third might be less lumber, less things available in the stores. So obviously, we need to keep an eye on that, because that can impact the labor market. If it went on long term, that means we could see layoffs, things like that. Again, this is sad, but when the economy is not doing well, that usually means we're doing well and our rates are going to improve. So not that we want the economy to be bad, but know that that does have impact because housing is what helps push the economy. So they want housing to keep moving, so they will lower rates in order for the market to continue to move. So we'll see what happens with that strike and how long it goes on. I hope it doesn't, because obviously it's going to have impact. It could impact inflation. There's all kinds of things that it could be impacting. So we'll see what happens with that. So keep your eye on that. The sales here, overall, when we look at sales, and we had August because this is early October, so we don't have September yet. Most of the sales, like in Northern Virginia and Prince William, increased. Dulles area actually went down, very minor, but it did slightly decrease. Our listings were up also in Northern Virginia and Prince William, slightly down in Dulles. And then, the median price again was up in Northern Virginia and Prince William in August, down in Dulles. So Loudoun definitely, over the past couple years, I think with these higher rates, I think have struggled a little bit more than Prince William and Northern Virginia when I see like sales and growth and things like that. Obviously, it's still, a very sought after area, but I think the affordability could be more challenging, and it's obviously a little bit further out. So that might be impacting some of that market. All right, lending information. So I wanted to just kind of go over the NRA changes. Obviously we've been in a month and a half now since the changes occurred relative to commission. And what I wanted to do is just ask you guys if you could, either unmute yourself and share what have you seen so far relative to the changes regarding the commission and the buyer's agent not being automatically paid by the seller. I'll call on you guys. Jennifer, what about you?
I haven't seen anything on my side. The sellers.
Meaning it's been business as usual. Is that what you're saying?
Yes, ma'am. Yes.
Okay.
Ma'am.
Okay. All right. Very good. Anyone else?
Yes, I've seen nothing really change either. The agents are just sending over paperwork to the approval that they will get paid. So they're just going right along and just putting in proper paperwork to ensure there's compensation.
Okay. All right. Very good. Anyone?
Yeah, I just.
Oh, Bill, I think you muted yourself. You start talking and then.
Okay. I hate the idea that I have to call a listing agent to find out what the commission is before writing an offer. That's one thing that has changed.
Yeah. I mean, obviously when you're calling the list, you're usually calling the listing agent to find out if they have other offers, if they do, what do they look like, things like that. So obviously that can be, part of that conversation. I've also heard of agents, tell me that either on the listing side or the buyer side that the agents are either putting in there or putting it not in there and not necessarily asking. And some agents won't answer the question. They'll say it's negotiable, so that you just have to put in what you're requesting and then see how it goes. Have you experienced that when you've been making the calls, or how have those calls gone?
Yeah, that's also true.
Yeah.
I noticed that there's a lot of agents that don't answer at all,
Yeah.
the phone at
Yeah.
all.
Yeah. On the listing side.
Mhm.
Yeah. Anyone else have anything else that they've experienced that might be different than what we were talking about?
This is Xin Lin. I want to say at the beginning, most of the people are not comfortable saying the actual number, but now they're at least throwing out a number and say negotiable.
Mm-hmm. Mm-hmm. And what I will say from my side of things, the majority of the contracts that we've received have had the buyer commission on there, and the seller has agreed to pay. I'd say most of the time we've seen 2.5% would be the norm. I think we've seen one at 2%.
Hey, we
but-
can't talk about commission numbers.
Oh, okay. Okay. Well, so just on average, what most of them we're seeing is that it's being paid. But again, it's still, obviously negotiable, and you guys will figure it out. But I think for the most part, what we're saying and seeing is that it's business as usual for the most part, in the sense that, buyers have not been required to do it as much as I think everyone was fearful of. So that's the good news on that front. The home buyer's guide, I wanted to share that with you guys as well, that we just put together. I think I showed it last time, but I couldn't remember. So I just wanted to, man, having one screen I don't know how people do this, because I usually have 3 screens going, and having one is a whole new world.
I don't think you showed it last time. How terrific.
Oh, good. Okay, well then let me find it here. Oh my goodness, why is it not showing? Leslie, do you have it? Can you pull it up? Because for some reason it's not in my thing here. Let me have Leslie send it to me, and so I'll share that to you guys in a minute. We'll come back to that. The 5/6 arm, there is a really strong jumbo arm available right now. It's a 5/6, which means it's fixed for 5 years and then adjusts every 6 years. It's in the low fives, has, depending on the loan amount, it might have like 0.5 point or something like that, but it can be very favorable right now for clients on the purchase transactions. So something to keep in mind. And jumbo means anything that's over 766 right now. But I will tell you that we also have new loan amounts going into effect. In November, Fannie Mae and Freddie Mac always announce for next year what the new loan amounts are going to be. My company has already put into place for the conforming loan limit that we can go up, I think, up to 814,000. So anything above at 814,000 or lower is considered a conforming loan amount, which also means you only have to put 3% down if you're a first-time home buyer. So super helpful in this market. But for the jumbo loans, they don't do the early numbers. So we can still do 766 and above, and that could be considered a jumbo, which means the jumbo market, the rates are very strong right now. And a lot of times that's the best rate. So if they can meet the guidelines, which are a little bit more restrictive, require more documentation, then we are going to suggest that. So just something to keep in mind. And then I try to warn the clients, like, hey, this is more documentation than a conforming conventional loan. So you're going to come to me and say, hey, I never had to do this before. And the reason why is you probably didn't do a jumbo loan. So anytime we do jumbo loans, there's a lot more involved, and some people can get frustrated. So we try to warn them up front so that they know what to expect. Non-warrantable condos. Again, I had one recently that, I think I mentioned this a couple months ago, but Fannie and Freddie made some changes earlier this year that if a structural engineer report has been done, then we have to see a copy of the report. And if there's any repairs that have been required as part of that, then those repairs have to be made before it can be warrantable. So there's a questionnaire they fill out. And if the answer is yes, you've had a structural engineer in the past 3 years, then we have to know if there was any repairs required in that report. So something to be aware of when it comes to condos. Bank statements, loans, something to keep in mind, bank statement loans are only for self-employed borrowers. So, it's the intention is, as we know, just like you guys are, self-employed borrowers write off, all try to write off as many expenses as they can, which then obviously can impact their affordability and their qualifications for a mortgage. So the bank statement alone allows us to either go back 12 months or 24 months, and we average the income of the deposits that have been deposited into the bank statement. Now, I will tell you, rates are normally higher with this program. So it's something to keep in mind relative to this. But if they want to get a home and this is our only option, this obviously allows them the ability to still purchase. Okay, investment loans. This is investment properties. Again, the investment property, you know, I looked at I have a client buying a property in West Virginia right now. It's a new construction as a investment property. I looked at it with 20% down versus 25% down. It is a huge difference. With 20%, you can't, the rate is always going to have a cost associated with it, at least a point. It's going to be in the sevens, mid sevens or higher. With the 25% down, it's 7 or lower with no points. So if you have clients that are buying investment properties and you have clients come to you, just know that the most ideal for them for interest rate, which obviously can help with cash flow, is 25% down. Obviously, they can do 20%, but just know that it's going to impact the interest rate. Refinances, as we all talked about, rates have improved a lot. So people that have bought, you know, I have a client that's at 7.7%. Bought, I think we did their loan last fall, which was one of the peaks of what we had seen. So they obviously want to look at refinancing. Now, I just want to say that, you know, I've been doing this for 21 years, and my goal is always to help the clients and for them to make the best financial decision. Refinancing now may not always be the right decision if you just purchased in the past year, because there are closing costs involved. You know, there's time that it's going to take for you to recoup those costs. So I'm always going to look to see what is the savings versus the cost and how long is it going to take you to recoup that cost, and does it make financial sense? And so, you know, right now that might, if they put 3% down or 5% down, they may have to come up with money. So they may want to wait a little bit longer. So what we've been doing for clients is creating we're calling it as a strike rate. And this is the rate, meaning like once we hit this point, we're setting an alert in our system. And once we get to this rate, let's move forward with the refinance, because we've identified that savings is sufficient to cover the cost of the refinance, and it makes sense to now move forward. So that is something that we're definitely working on with clients. We have, you know, I think I have like 31 clients right now who've reached out interested in refinancing. We're keeping all their information. We're keeping that organized in our database so that we can get back to them when we get to the point where it makes sense. All right, let me now pull up the home buyer's guide. Leslie just sent to me. You guys are getting to see all kinds of stuff from me now because you're going to see all my screens, all my chats and everything. All right, so one of the things relative to the NAR, and this is something that I've been talking to realtors about, is obviously you guys had a listing presentation in place. It's also important now for the buying side of it to have the presentation in place as well. So we have put together a home buyer's guide for our clients that we want to share. I wanted to share with you that I think, you know, I did it the other day. A client came into my office. We had our computer there. We scrolled through it, walked through it, and it was just very well done and very easy for them to digest the information. So this is the first step. This is introducing me, introducing the team, you know, talking a little bit more about who they're expecting to work with throughout the transaction. Then, you know, what our goals are, you know, when working with them. Then also the 6 steps of the mortgage process. So we walk through, like, the first 2 steps is the pre-qualification part, right? And so we walk through that. Then we walk them through what they can expect throughout the process so that once they get under contract, they're aware of what's going to be coming. So we walk them through this during our first meeting as well. And then we talk about mortgage rates. I help them understand, like what we were talking about earlier, is how are rates determined? You know, who determines interest rates, and when do we lock the rates? And what happens once we lock the rate? You know, because that's another misconception that a lot of agents agents and clients believe, okay, we've locked the rate. Well, now the rates got better, so let's relock. And unfortunately, it doesn't work that way. We don't have the ability just to relock. We have to float down. It has to improve by a certain amount. there's a lot involved in that conversation for us to be able to determine if we have the ability to change the rate once we've locked the rate. So we kind of walk through that with them as well. Some do's and don'ts. So we kind of go over, what to expect, what things you're going to be doing, but things that we don't want you to do. And then we go over this 10 commandments. So, if they're thinking about changing their job, changing the way they're paid, because a lot of people don't understand if you go from a salaried position to now commission, that impacts your ability to purchase a home depending on the timing. If you're looking at making a large purchase, if you want to get a new credit card, all those types of things can have impacts on our process. Because I also let them know once we go under contract, we monitor their credit. So we get a notification if their credit has been run. And then we have to identify if any new debt has been obtained by that inquiry that has been done. So I again kind of help them understand what all of that means. And then, if their credit is challenging and it won't get them the best possible program or interest rate, then we're going to go over that with them as well and what the capabilities we have for that. And then we have testimonials, right? So it's like just for you, we have all of our awards. So it's things you guys want to be sharing with your clients as well as what have people said about you after working with you, and what awards have you earned as well, and share that with your new clients. And then we have ways to track us on social media, our Instagram, our TikTok, all that kind of stuff. I think this is cut off because the way I'm sharing it, because normally you can see all of the links. So you have all the links, and then what I'll tell them too is, oh, I think she has it set up. It takes it. Oh, I love this, Leslie. You changed this since last time. You click on the link and it takes you to our Instagram. So it takes you to our page. So because we email this to them after I have the conversation with them, so they can click on it and see all the information relative to us on TikTok, Instagram. And I tell them we put out educational videos so they can follow us, so they know different tips and programs that we're sharing. So if you guys don't have something like this, I highly recommend it. Leslie did it for me in this, I think it's like a $5 or $7 monthly fee to have the book. I can't say it was easy because I didn't do it, but I know Leslie did it. And I think that, if you have questions on it, she'd be happy to just talk you through kind of what she did. I've even thought about having a class for her to teach how to do it. So let me know if you guys would be interested in something like that as well. All right, anyone have any questions on any of these details that we just went over?
So the book, would you be willing to forward it to us to put
Sure.
in our package? Okay.
Yeah,
Thank
yeah,
you.
for sure. Yeah, I'll email this to you guys, and you can. And I've shared, like you said, Mary Lou, I've shared it with agents who then have passed it on to clients, and then we share it with the clients as well. So yeah, that would be great. I'll forward that to you. And if you guys have any other questions on that, just let me know. Okay, lending tips. So doctors program, we have 100% no MI doctors program. So if you guys have physicians, that is something that we can definitely help them with. I just met with a vet the other day, so that's something that we're going to be looking into. Buyout for other owners, that's something we've been doing more frequently, either through divorce, or there's a decent amount of clients I've had recently that have inherited homes and they have to buy out the other family members. So just keep that in mind that we're able to do that. Community Promise Grant. This grant we have is $6,500. It is not income based. It is not first time home buyer based. It is based on where they currently live, interestingly enough. And it's certain specific zip codes, and I couldn't tell you exactly what they are, all of them, because we put it in our system and then it tells us whether or not they're approved for it. So they do get the $6,500 grant, but they also get $500 credit towards their appraisal, and we pay for their home warranty. So lots of little benefits there as well. So if a client is, and it doesn't matter how much you put down, because a lot of grants say you can't put more than 5% down or you're not eligible for the grant. This one does not have that determination as well. So it's a great program. So the only way, unfortunately, like I said, we know if you're going to be eligible for the client is for them to fill out the application, and then our system tells us if that address that they're currently living at is eligible for that program. New job. That's again something we've seen a lot of. You have to, if you have a new job, you have an offer, There must be, they have to start within 90 days and they have to have no contingencies. Something I just came across recently is I had a client that is in Japan with the military and they are getting moved here. And a lot of lenders believe that you have to occupy within 60 days. There are some variances with VA that allow a little bit more flexibility with that. So that's just something to keep in mind if you have clients that want to buy a little earlier than when their orders are bringing them here. We do have the ability to do that, and I've been able to successfully close those prior to that, even if they're not going to be here within that 60-day period. Recasting, something that is always I'm discussing, I'd say every week. I have a client right now who's purchasing a $1.1 million home. They're putting a good amount down, 200,000, but then they own their home free and clear that they currently own, and they're going to sell that, and then they want to recast and put it down on the loan. The thing again with that is VA and FHA do not allow recasting. So that same client was VA eligible, but we were not using his eligibility because then he would not be able to recast the loan. He would only be able to apply that money and get the payment lowered by refinancing. And of course, there's costs associated with that. So we went with the conventional option for that.
Can you
Leasing your,
specify, I'm
yeah,
sorry,
go ahead. No, go
this
ahead.
is Veronica. Can you explain a little clearer for recasting again, please?
Yeah, so what recasting is anytime you make a large principal payment against the principal loan amount. So it usually has to be at least $5,000 to $10,000. And if you applied, let's say $10,000 towards your loan and going solely towards the principal, you can then request for that principal and interest payment to be readjusted, which we call recasting, to the new based on the new loan amount. So your principal and interest payment changes. Nothing else changes. Like the interest rate doesn't change, the terms of the loan, like how long you have the loan, any of that changes. And it's a small fee. It's like $300 to $500 that it would cost you to do the recasting. So it's an easy way for clients that want to buy first and then sell later and take the money and apply it towards the mortgage and be able to get that payment down to where it would have been if they had sold first.
Gotcha.
Does that
you.
help?
It does. Thank you.
And like I said, that's conventional loans, Fannie Mae and Freddie Mac loans. Like if it's a jumbo loan, we have to confirm that particular investor allows for recasting. VA and FHA does not allow for recasting. All right, leasing your current home, again, something that we've seen quite a bit of. We have a client right now who wrote an offer, needs to rent his current house out before closing on the new home. Fortunately, he wrote on a property that had been on the market for a little while, so he's had a financing contingency. He's just extended the financing contingency because he hasn't been able to get his house rented yet. Part of that, I think, is because he had a long closing, and the renters that have come have needed to move in quickly. So it's kind of trying to balance all of that. But how that works is once he leases that, we have to have the executed lease signed by both parties, a copy of the security deposit check, and a copy of the first month's rent. And those two checks have to be deposited into his account so that we can verify that he's received it. And then we use 75% of the rent he's going to receive to offset the mortgage payment that he has on the home. And so I've done that many times, and I knock on wood, every time it's worked out, that they don't start to try to lease out their house until they go under contract, and we've been able to get the lease in place and be able to get to closing. So something to be aware of. VA Streamline, I mentioned this before, but just wanted to reiterate. VA is really the only loan that exists that has, well, I shouldn't say exists, but the most common loan that is done that has a waiting period. And that means that when you close on a VA loan, so let's say we close today on a VA purchase and their first payment isn't until December 1st, they have to wait 210 days from December 1st before they can refinance. And they had to have made at least 6 months payments within that time frame as well. So, rates for VA, I told my team this yesterday, VA loans are probably the best option right now for refinancing because the rates have improved, I think, the most significant. They also, the way they price those loans allow us to give a credit towards closing costs the easiest out of most loans that we do. So we can usually give a credit towards closing, you get a low rate, you can recoup the cost pretty quickly. So those are if you have clients that are VA, that have, can meet that time period, they can benefit, I think, from refinancing now more than conventional clients, because the conventional rates have not come down as much as the VA. So if you do have clients that are veterans, use their VA eligibility, you could definitely reach out to them, see if they've looked into it. And then quick closes, I have a client that wrote a property on a property in DC. It's a condo, been on the market for many days, I think over 100 days. They did over ask, they offered less than the list price, but they also offered a quick close. We're closing in 21 or 23 days, I think. And that helped them secure that lower price because we're closing quickly. So even when it's not a super competitive market, quick closings can still help secure the transaction, because they want to get rid of the property, right? If it's been on the market that long, it's been sitting there, not rented, and they're, losing money on that. And if they have a mortgage on it and have to pay it every month. So us being able to close quickly helps secure him to get that property, I think 50,000 under list. It was overpriced to begin with, but still it'd been on, quite a while. So any questions, anything, you guys, any comments, any questions you have on this information? Well, I want to thank everyone that has their camera on, Richard, Jennifer, Christine, I think it's Jamek. I hope I said your name right. And Mary Lou. I appreciate seeing your guys' faces. It's so nice to see people when I'm talking. So I truly appreciate it. There's Bill. So thank you guys so much. I appreciate you.
Thank you. And it's actually Jamie. I know, I like the
Jamie.
though. I think it's kind of cool.
I couldn't see the E.
No, it's not. She just does it that way on the Zoom.
Oh,
Yeah.
okay.
Yeah.
All right.
So
Well, very good. As I say, I took my reading glasses off. All right.
Okay.
Well, you guys, here's all of our information. If you guys ever need us, use us as a resource, questions, anything that we can do to help you guys be successful in this market, we are here to do so. Have a great rest of the day, and we'll see you again soon.
Thank you. Have a good.
Thanks.
All right. Thanks.
you.
All right. Bye.
Bye.